Yo, what is up, buddies? We are live to discuss our favorite topic, taxes, with Kevin and Eric. Fun fact, I actually knew Eric because he was in Design Buddies, and I've been a fan of his Carrot podcast because I always see the clips on my YouTube shorts. And then we randomly met at South by Southwest and became friends, and here we are today. And before we dive in, I'm going to give it a couple of minutes for people to join. I would love to know from y'all, where are y'all based and what are your favorite YouTubers? Kevin and Eric, where y'all based and favorite YouTubers?
Yeah. So first of all, Grace, thank you so much. That introduction was so loud. I think the volume cut off on your microphone, like it peaked. Is very impressed by your energy. For all of those you joining here today, are you called buddies? Do I call you buddies? Is
Yeah,
that the term?
buddies.
Hey,
Yeah,
buddies,
buddies.
buddies. I'm very honored to be here today. As Grace mentioned, I'm co-founder of Carrot, and we're a company that helps creatives and creators with their finances. We've worked with a lot of YouTubers like Ludwig and Kai Cenat and MKBHD and Linus Tech Tips to help with things like credit, taxes, and now business banking is what we're launching next. And to Grace's point, so I actually ran into her at South by Southwest, and I already was following everything she was doing with Design Buddies and mentioned that tax season is coming around. So it could be a good opportunity for us to do an event together for each of you, all of you all lovely buddies, to help you with your taxes. And with us today is Kevin O'Connell, an expert accountant and CPA I've worked with for years. He runs his own firm, also working with creatives and creators as well. He, I've got to admit, when he called in that virtual background, the grand piano, I thought it was real. So I was like, all right, Kevin's been doing well for himself. Tax season this year's been busy. But I now recognize this virtual. Grace, your background is real. It looks kind of like a garage door.
Oh, it's not. It's like in our little kitchen, in our creator house we're in LA right now.
Oh,
It's just a
very
little
cool.
corner. Yeah, it's a clean background. So I thought let's go with
I like well, chat. I think it looks a little bit like a garage door, which is kind of cool outdoor vibes. RE, your question: where are you based? Favorite YouTubers? I'm based in Los Angeles right now. I previously lived in San Francisco on the East Coast. I've been a little bit everywhere. In terms of favorite YouTubers, I would say probably one of my favorites because I saw the comment on this is Chloe Shi, Shih. I'm very biased because yes, I did do a podcast with her, and thank you so much for the lovely commenting on it. And she's just like previously worked in tech as a product manager and then became a full-time creator creative, which is exactly the sort of dream that I hope more people get to follow, ways to support yourself full-time while doing what you love, or part-time if that's what you want to do as well. So Kevin, what about you? Where are you based and who are your favorite creators?
Yes, I'm based out of the East Bay, California, Lafayette, about 30 minutes east of San Francisco. But I'm actually in Brazil right now. We'll be returning back to the US in a few weeks. Favorite YouTubers? That's a tough one. I typically only use YouTube to learn how to do things online for the business. But if I had to choose, um, let's see, Nick Sarev is someone that
Oh,
I follow.
I
Just from
actually
my
don't know
YouTube history.
who that is. What type of content does he do?
He does a lot of like AI automation. So for like small
Oh,
businesses,
that's pretty cool. Well, Grace, what about yourself? Who are your favorite creators?
Ooh, I'm a fan of Chloe's content actually. I love her editing style, and I know
Yeah.
her because I was like alpha testing her communities feature on Discord, and she like
Oh,
reached out to
yeah.
me. Yeah, and I saw her content, and a lot of my friends like recommended her content like about the I think the negotiation videos and design
Yes.
buddies. So I've been following her since. So big fan of your podcast with her as well.
Oh, thank you.
Yeah, she seems like she's vibing. But yes, I
Yeah,
saw a comment
she's
in the
sweet.
chat. Yeah, someone Zara says, "Hi, love your podcast with Chloe."
One thing, so for those of you wondering, in addition to the company Carrot that I run, and yes, we do a lot of podcast interviews with creators on the Carrot channel. I had a side one with Chloe called The Joy of Missing Out, where it was just a yap podcast where we yap about things. And I think my favorite thing about that was I knew this about Chloe already, but it really reinforced she comes off very delightfully cutesy, but she's actually a savage and she will F you up. And her spirit animal, she told me, is a cute teddy bear holding a knife because it's cute, but you'll still get stabbed. And so that's something I feel like I really got to appreciate about her. But I feel like, Grace, if I had to go with you for, that TikTok sound is like looks like a cupcake would kill you. Like looks like would kill
Familiar.
you is a cupcake. Right. So Chloe, I feel like looks like a cupcake would kill you. I feel like you're like looks like a cupcake is a cupcake because you're just very effervescent and friendly and bubbly. Well, what do you think of that? Would you agree with that assessment?
Oh yeah, I guess so. I feel like I have different modes depending on what game people want to play. For example, in SF, people are super networky and businessy. I can play that game. People want to be friends. I can play that game too. So it's all like I kind of like adapt. Generally, I'm
Nice.
vibes, but people are savage. I will be
You'd
savage
be
back.
savage back.
Yeah,
Yeah.
just depends. I
Okay.
try to spread positivity and love, but people want to not play nice. I will run it back.
Yeah, you gotta fight them. So for those of
Yeah.
you joining, by the way, in case you're trickling in now, I'm here today with Grace from Design Buddies, who's hosting this incredible event. My name's Eric. I'm from Carrot. We're going to spend a little bit of time talking through taxes. We are going to start with just a high-level overview of some slides I put together with my partner here, Kevin, who is a trained CPA and accountant working with creators. So we're going to go through a few different slides and a few different topics. And as they're going through, feel free to ask any questions in chat. Kevin will answer them when he gets a chance. And then toward the end, we'll just open it up for Q&A, generally speaking, to everybody. So that's how it's going to be structured today. Grace, when do you think we should properly get started?
Yeah, we can start right now. Got some people on
Alrighty.
LinkedIn and YouTube coming in.
Oh, wow. YouTube
Don't
buddies,
be
LinkedIn
shy.
buddies.
Don't be
So
shy,
good
buddies.
to
Dump your
good, so
questions.
so got so good to meet all of you. All right. Well, in that case, we are going to get started. I'm going to share my screen now. Cool, cool. Amazing. So to my previous point, every good slide presentation always starts with a slide with pictures of everybody showing everyone who we are. This photo is what I look like essentially 0.1% of the time. It was the one day where I thought my hair looked really good in the summer breeze, and now I use it on everything. And Grace, I love you've got a little octopus as well as a bunny in your hands. Very cute. I also love that octopus because I know if you flip it upside down, it becomes an angry octopus. I think that
Hmm.
goes to what you said on knowing how to play the game as needed. And then, of course, to
Ah.
the right hand image, we have Kevin, who, Kevin, again, I'm sorry I couldn't find a picture of you with the background. So you're just sort of floating peacefully in space. But you look very, very good, and I love the tie. So the three of us are excited to walk through a little bit about taxes 101. And I think very high level, before we go into details on taxes, first question I want to go through is like, why should I even care about taxes? Because if you're a creator, if you're a creative, you're undoubtedly focused, of course, on making content, on growing your community and monetizing. And taxes is not one of those top three, but I think there's a few reasons why you should care. And the first one is because if you're knowledgeable of taxes, you can save money by doing write-offs. This image I have here, this individual is named Ludwig. He's one of the biggest streamers in the world, incredibly smart and intelligent individual. This is not actually Jackie Chan. This is a life-sized wax statue of Jackie Chan that Ludwig purchased. And what's really cool is given his work, this counts as a prop and this counts as a business write-off. And because if you're savvy about your taxes and you write off props like this, you can essentially save 20 to 30% on the purchase, such that you too can get your own life-size wax statue of Jackie Chan. So reason number one, I think why you should care about taxes is you can just save a lot of money. Reason number two, in addition to saving money, it's going to help you grow your business. If you want to know how to expand, whether it's going to another platform or a business line, like maybe you want to start opening up a line of products that you're cross promoting, or even expanding your team. I know, Grace, you've mentioned that Design Buddies now has a team of several. You have co founders. I think these are all questions that you're only really able to answer if you're knowledgeable and aware on how much do you even make and how much do you even spend. I'd be curious, those of you in chat, how many of you know actually how much you're making this year to date? And I can't see chat because I'm sharing screen, but I'd wager some of you would, but a lot of you might not. And so you should care about taxes because if you're good at doing your bookkeeping, you'll know how much you're making and spending. That's needed to grow your business. The third reason is don't get screwed by the IRS. I have a headline down here. Oh, when Spain, the country of Spain, charged Shakira for tax evasion for the second time. And if Shakira can't even escape taxes, then you probably can't either, and you should pay them. So that's a very high level. Hey, this is why you should care about taxes. All that being said, the three things that I want to talk through today is, yeah, number one, very high level, like how do taxes even work? Number two, yeah, let's talk about tax write-offs, all the different sorts of ways that you can actually save money. And number three, you've probably heard these letters thrown around, LLC, S Corp. What's the right way to set yourself up to ensure that you're legally clear and also saving money? So I'm going to start really high level with obviously the most exciting one. How do taxes work? So for those of you who don't know, if you are running your own business, you're a sole proprietor, you're an entrepreneur, you actually need to pay quarterly. April 15th, June 16th, September 15th, January 15th, every 3 months, you are supposed to calculate how much you think you're going to owe for taxes for the year and submit a payment to the IRS. Now, why? See, if, for example, you were corporate, like if I were working for Walmart, I wouldn't have to worry about paying quarterly because throughout the year, Walmart would actually withhold a portion of my paycheck and send it to the government to pay taxes because the government expects that when the time to actually file your taxes comes around, which for most of us is April 15th, if you're doing your own thing, the government expects you've already paid how much you owe. It's just a matter of filing your paperwork so that they can check. That's why if you've paid too much during the year for tax purposes, the government will send you a refund, which isn't really a good thing. It means you paid too much and you gave the government an interest-free loan. And if you haven't paid enough, that's when you get penalized. So if you work for Walmart, Walmart will calculate that and withhold it for you to some degree. But if you are a design buddy and you're a creator, you're creative, you're making income on your own, nobody's doing that for you. You actually need to do that yourself and make payments 4 times a year. And if you don't, you will get penalized. Probably the most relevant thing here is April 15th is rolling around. So if you're a sole proprietor or an LLC, you got to be filing your taxes within the next week, or you're going to get penalties. Now, of course, one little tip that we can give you is you can get an extension. If you file for an extension, you actually get another 6 months. So instead of being due on April 15th with an extension, it's now going to be due October 15th. Now you still have to make your payments, but at least the paperwork piece gets pushed back. And you're probably wondering, how do I get a tax extension? Well, a few things. Number one, if you are in an area that's been hit by disasters, the IRS will usually just give it to you for free. A great example is Los Angeles County has suffered from high winds and wildfires. If you are a creator, creative, and entrepreneur living in Los Angeles County as your primary residence, you actually get the extension automatically. Otherwise, there's a few other places the IRS also recognizes as getting extension automatically. But if you're not in one of those areas, you do need to go and file it online yourself. And if you're curious, Kevin here actually put together an entire video instead of slides and documents talking through how you can do this yourself for free. It takes 10-15 minutes. If you want it, you can follow up because we'll send an email with Grace later on. Or if you go to our Instagram, it's trykarat, TRYKART, and you DM us the word buddies, we'll send it to you as well. So high level, make sure you're paying quarterly, hit your deadlines, and yes, you can get a tax extension. Another really important thing is you should actually be able to just track your revenue expenses. You can't pay taxes if you don't even know how much you're making. And if you don't know how much you're making, you've done a really bad job organizing how you keep track of things. People often ask, what's the easiest way to keep track? It's actually just to set up a business bank account and a business credit card. This way, whenever you have revenue, say from clients, just put it in your business bank account. And if you're buying supplies, put it on your business credit card. And if you're wondering how to get it, that is literally what my company does. And like I said before, we'll send over information on email later on or DM us on Instagram, the word buddies. And we specialize in setting up business bank accounts and business credit cards for creators with better terms than you would normally get. So now we got through the boring part. That's on how taxes work. Now we get to talk through the exciting bit. How do we save money with taxes? And it is the most important question of all, as always, can I write it off? And I'm curious for those of you in chat, if you want to share things that you think are write offable, please do. And what I'll say, the number one guiding principle on whether I can write it off is whether it was an ordinary and necessary expense in the course of your business. All that means is, was it something you had to buy for your business? If so, you can write it off. And that specifically means you were lowering your taxable income by the amount of the write-off, which essentially means you get to save 20 to 30% on that item that you're writing off. So we're going to go through a few different examples. And of course, feel free to ask questions in chat. To my initial example, your life-sized Jackie Chan wax statue, can you write it off? If it is a prop or accessory you are doing for business purposes, yes, you can. And I highly doubt or hope that Ludwig is not getting a lot of personal use out of the Jackie Chan statue. meaning it is for business purposes. So if anything you're getting for a shoot, for example, absolutely, you can write it off. Another example is, what about your rent? Wherever you live, your mortgage, can you write that off? And the answer is yes, a portion of it. If you work out of home like I do or many others do, you can calculate the percentage of square footage and where you live is used for business purposes and write that off. For example, for me, in my little podcast room, if it's say 25% of my overall living space, I can write off 25% of my rent. Now you might be wondering, okay, what if I be making content everywhere? I be shooting TikToks in the kitchen, in the bathroom, in the yard. Can I just write off 100%? And the answer is not really. I mean, look, buddies, you can write off whatever you want. It's just that the IRS increasingly grows suspicious if you write off things that aren't real. And eventually, if they catch you and they audit you, you'll be in a heap of trouble. And so the general good guideline we have is, number one, if you want to write things off, know what you're eligible for. Number two, don't try and finagle and stretch things too much, because the amount of time that you're spending to try and be clever about it could probably just be spent on growing your business and growing your portfolio. And if it's really important to you and you're making more than, say, $80,000 a year, it might make sense to work with a CPA like Kevin, who can help you optimize your write offs and deductions. But that's a long way of saying yes. Depending on how much of your space you use, you can have a big portion of it. I say 10 to 25% is nothing crazy. Similarly, automobile. If you have automobile expenses and you use your automobile partially for business, you can write off a portion of them commensurate to how much you use your car for business. For example, if you have a car and you are driving it to a client meeting or to a WeWork where you work, and you do that 50% of the time, you can write off 50% of your expenses with that vehicle, like the rent that or the lease payment you make on it, or gasoline and things like that. There's also some rules when you're purchasing a vehicle where you can also increase your write-offs. For example, there's a famous one where if your car weighs more than like 6,000 or 7,000 pounds, you are actually able to get additional write-offs from something called bonus depreciation. And that is a complicated word with a lot of syllables. And all you need to know is depreciation is an imaginary expense used to mark when you buy a car. The value of that car drops over time as you use it. And bonus depreciation means you are telling the IRS that, hey, this car has actually decreased in value a lot since I purchased it. And that's a good thing, because that's an expense that you can treat as a write off that lowers your income that you can now get a tax write off on. Another example, one of my favorites, clothing. Can I write off clothing? And I think this is especially relevant for you creators and creatives who are doing things on camera. The answer is generally yes, if it is for business purposes. Generally no, if it's for personal purposes. Things that clearly count for business purposes. If it is promotional, like my shirt here with this logo. If it is protective, like it is a uniform, right? Absolutely you can. If, however, you are using it for both business and personal purposes, maybe you use it for these client meetings, but you also wear it outside, it is much harder to write it off. Or if you find a good CPA, maybe you can write off the percentage of the value of the item that ties to how much you use it for business purposes. Continuing to go down, I would say another great example of actually something you can write off if you're using it for business purposes is the supplies and software and cameras that you use, right? If you were purchasing items to create or design, like that Photoshop, that DaVinci Resolve, if you were buying a camera, that is strictly business expense and you can write it off in a way that you can't with clothing. Another great example is actually meals. Can you write off meals? I would say in many cases you can. If it's a meal you're having with a client or business partner, or hey, if you're lonely and you call up Grace and Grace is down to jump on the phone and talk with you while you eat your meal, you can make a strong case for writing off 50% of it. Similarly, if you are traveling, because maybe Grace hit you up and said, hey, come on by, I'd love to talk to you about Design Buddy shenanigans, and you go and drive on over, yes, get something on the way. If it's long enough, you can write off 50% of it. If you're hosting a party for your employees, you can write off food. And finally, for content shoots, specifically if, for example, you are shooting content around your lunch, right? And it's essentially a prop that you're using for business purposes, you can write it off as well. A couple more examples that I'll give you to be aware of on tax write-offs. Another good one is a write-off called QBI, aka Section 199A. So if you are a solo entrepreneur, you're running your own business, you can write off potentially 20% of your income, which is pretty darn good. And this is a great example of something you might want a CPA on, because there's rules on whether you apply. Generally, if you're making less than say $170,000 or $180,000 a year, congrats, you get to write off potentially 20% of your income. If you're making more than that, you probably can still write off some portion of it, but there's a lot of different rules on the types of income that you can write off. But like this is just such a great example. If you're savvy about your taxes, writing off 20% of your income is worth so much and is potentially helping you save so much money. A couple of edge cases that I'm going to walk through on write offs. People often ask, hey, well, I live in a high tax state like California or New York. I don't want to pay those taxes. What if I incorporate myself in a low tax state like Wyoming? Does that mean I get to now pay Wyoming state tax? The answer is not really. It varies state by state on the rules on how they decide to tax you, but generally it's based on what's your primary residence, which is based on things like have you spent more than half the year there, or are you living there and working out of there and so on. Incorporating in another state doesn't really help you at all in terms of, cool, actually, I should be paying taxes in that state as a primary residence. You've probably heard a lot of folks ask, well, hey, if I want to get an LLC and if I want to incorporate myself, why don't I go and set that up in another state like Delaware? Because isn't Delaware better for businesses? And the answer is yes and no, not for you. Delaware is good for businesses if you are a C Corp. And that means you're a giant business with investors. It's like your Meta or your Facebook. Then you definitely want to be in Delaware because the courts there are very friendly when business disputes come up. But if you are just an LLC or an S Corp and you're just doing your own little thing, you don't need to be a C Corp. And you should probably just incorporate in the state that you're in. There's a few different exceptions, right? But generally, that's the easiest thing. And that's a really good segue to talk a little bit more about LLCs and S Corps. A lot of people think that LLCs, you do them because they help you with taxes. That's actually not true. There are a few reasons why you want to get an LLC, but none of them have to do with taxes. Reasons why you would want to get an LLC. Reason number one, because it protects you legally. If something goes wrong and somebody is suing your business, you want to ensure that they can't also go after your personal assets. And having an LLC gives you legal protection, so you're separating out business and personal. Keep in mind, though, this legal protection only applies if you're actually good about separating out business and personal. As I mentioned before, if you have a business, you should get a business bank account and a business credit card, which of course my company can help you with. If you don't, even if you're an LLC and you're just mixing the two, you're still not really protected legally. Reason number two why you want to get an LLC is if you have employees and you want to pay them. Fun fact, most of you probably are paying contractors via Venmo or PayPal or Zelle, and that's fine. But just so you know, there's a number of rules on whether the person you're working with should actually be classified as an employee. And if you're working with a contractor and say you are their only person they're working with and you're managing them and every day you're checking in with them, they could probably make an argument that you're misclassifying them as an employee instead of a contractor. I've seen many creator and creative friends run into this issue where they're working with someone as a contractor, things go wrong, and the contractor sues them saying, I should have been an employee and should have gotten benefits. In that case, you should employ them and you need an LLC in order to do that. And the third and final reason is when you're an LLC, it's easier for you to get business items, as I alluded to before. Now, you're probably wondering, though, gosh, well, people tell me that being an LLC does help with taxes. And by the way, this is the last thing I'm going to go over, and then we're just going to open up for Q&A. So thank you so much for listening so far. Now, how can an LLC actually help you save money on taxes? That's when you get it treated as an S Corp. An S Corp is when you go to the government and say, hey, that LLC that I have, I actually want it taxed as an S Corp. Keep in mind, if you are just an LLC, you still get to write things off. Actually, if you aren't even incorporated at all, you are still a sole proprietor and get to write things off. But being an S Corp is an additional special level of treatment where you can potentially save money, but also it might cost you more than it's worth. To give you a little more color, if you are making more than, say, $80,000 a year, I think, yes, being an S Corp can potentially save you money on taxes. And here's why. So normally when you pay your taxes, of course, you pay income tax. You pay that to your state. You pay that to the federal government. You also pay something called self-employment tax. And self-employment tax is what covers Medicare and Social Security. And it can be up to 15.3%. Now, when you're an S Corp, things change. See, let's say this is how much you made last year. You have to pay that self-employment 15.3% tax on all of it. But if you're an S Corp, you only need to pay that 15.3% tax on a portion of it that you've designated as your salary. And the rest of it, you still get to distribute to yourself from your business whenever, and it skips self-employment tax. So to summarize, S Corps can save you money because a type of tax that you once had to pay on all of your income, you now only need to pay on a portion of it. But it's a lot of work to set up. You have to do paperwork. You have to run payroll and pay yourself as an employee. And so it's probably only worth it if you make more than, say, $80,000 a year. So that's the summary of everything I wanted to go over. If you have more questions, we will be sending a follow-up email. Also, if you can go to our Instagram and you DM us buddies, We'll send you more info on the slides, Kevin or CP a partner, how to get a Carrot business bank account, and all those other lovely things like that. Everybody, thanks so much for listening to my Yap session. Now we're just going to open it up for Q&A broadly. And now I'm back and I can actually see chat.
Awesome.
Cool.
Yeah, thanks so much. I want to clarify write-offs because I'm personally curious about this as well. And feel free, buddies, like drop more questions in the chat. So it basically like lowers your taxable income, right? And like, how does that work? How would you like document all these write-offs and all these like receipts? And do you have to clarify like what exactly you used it from? Like, how do you prepare your write-offs?
Yeah.
And how does that work?
So I think a couple points, and Kevin will probably explain and add more. But let's say you made $100 in revenue last year. For a moment, let's pretend that you had no expenses on that at all that you're recording. Like you're just saying, hey, I made $100 and I had $0 in expenses. Okay, cool. Now you need to pay taxes on that entire $100. So if your tax rate is like 20%, you have to pay $20 of that to the tax man or the tax woman or the tax person because it's 2025. But if you have business expenses and you record them accordingly, now let's say you made $100, but $50 of it you spent on business expenses, like paying editors to help you, or buying software to edit, or buying cameras. Now you're not taxed on that $100. You're only taxed on that $50. And instead of paying 20% tax on the 100, you only pay 20% tax on the 50. So the amount you pay is a lot less. Instead of paying $20 to the tax people, you only pay $10. That's a very long way of saying write-offs mean that you get taxed less because the amount of net income, the amount of profit you have is less. And to your other question, how do you file them? You don't even need to be incorporated to actually get write-offs. You just need to go and fill out a form called a Schedule C where you list all your different write-offs. And it's way easier if you have a business bank account or a business credit card. Kevin, anything you'd want to add on to that?
No, I think you pretty much covered it. I guess the only other thing I would add actually is that in certain cases, especially early on as a creator, you may actually have expenses that exceed your income, in which case you're not going to be paying any taxes. And it can actually roll over into future years as you get bigger and bigger and bigger. So making sure that you capture all those expenses even early on can benefit you later on down the road as well.
I love that. I see there's a, oh, go ahead, Grace.
Oh no, good. Oh good. Yeah, by capturing, do you mean like making a spreadsheet or like having the using everything with their business card? Do you get to like justify why and save receipts and stuff, or just that credit card expense should be enough?
Yeah, so when I say capture, I just mean reporting it on your tax return. But the best ways to, I guess, keep track of all of it is one through a business credit card, checking account, like Eric had mentioned, or or on some kind of spreadsheet. There are apps like Monarch, Quicken that will capture those types of business expenses as well.
Oh yeah.
Basically,
I
you
just
just
use
need
Google
a way to
Sheets.
record it.
Yeah.
Yeah, exactly. Google Sheets is fine. Like it doesn't need to be the most complicated thing. You just need a way of like remembering what it was. But yes, having a business bank account, such as the one we're launching with very soon, makes it easier.
Mhm.
I see Matt is alive also asked a question. He said, I'm going to open up an LLC today. Thanks, Eric and Grace. Just so you know, Matt, actually, one thing to keep in mind is there's like different ways to do this, right? You can do this online. If there's so many sites that do this, like Rocket Money, Doula, whatever, Zen Business. Keep in mind, some of them look like they're free, and some of them look like they charge you money. And so it's like, huh, why? And usually the ones that are free literally just set you up with an LLC and nothing else. As in, they don't give you an EIN, which is like social security, but for your business. By the way, for basically like 90% of the value of an LLC, you want an EIN. So like that's a great case where it seems like it's $0, but then to get the actual thing that helps it actually do anything for you, you need an EIN and it costs more money. Or like another good thing is that you'll dox yourself if you don't do this right, because you have to put in your address and that's not publicly searchable. And so you should usually use a registered agent. So that's why we usually recommend if you do want to set up an LLC, it's a good idea to do it with a lawyer, a CPA like Kevin, or yes, if you contact us and set up a Carrot business bank account, we have partners that will do this as well for you and will give you a discount. So yes, you can set yourself up with an LLC for free, just and dox yourself and not get any of the benefits of actually being an LLC. It's just something to keep in mind.
Yeah, thank you.
Cool.
Yeah, I used yeah, I also use registered agent too. Cool. So, illustration says TLDR need to know about freelancing and contracting. So it's kind of like a sole proprietor, or like should freelancers set up an LLC? Should you sole proprietor?
I think this is a good question for Kevin, where Kevin, you gave a great answer the other day on what if you have a full-time job and you also have a side hustle, right?
Mm.
How does that work when you file your tax return? Because I assume like if you're freelance and contracting, you might have something like as a main job on the side. And we can also talk through if you're just doing that as your full-time gig too. Kevin, you want to take that?
Yeah, sure. So setting up the LLC, like Eric had mentioned earlier on in the presentation, is more so for liability purposes. If you're losing money as a sole proprietor or you're losing money as an LLC or S Corp for that matter, it's all treated the same way. But Eric had mentioned the 80,000 in income before it really becomes necessary to become an S Corp, because that's when you start to get impacted from a tax standpoint. So whether you're doing it as a part-time thing, a full-time gig, it really doesn't make sense to go those extra steps until you're making money and it saves you money from a tax standpoint.
Yes. So what I would add on to that is exactly as Kevin said, if you're freelancing or contracting, like this is work that generates you income, right? If you have a full-time job, you still need to report on your tax return. And if you have write-offs associated with it, you still get the benefit of those write-offs. You put it on your Schedule C. And as Kevin said, it's say it gets to a reasonable enough size, that's where you want to take that work and turn it into an LLC. I'd say the bar to turn an LLC is pretty low. Like if you just want some protection from business POV, you should turn it into LLC, but then you should only turn it into an S corp if, as Kevin said, you're making more than 80,000. So I think that was a great question. I'm just scrolling up if there are other ones. Grace, I love the whole time that you actually shared a lot of good comments yourself. I think you said hair dyeing if I film content.
Yeah, it's like percentage of time. I need to calculate the percentage. It's like it was like $400 to dye my hair.
Yeah, I think that's a
That's
great case where if you are arguing essentially that you've dyed this hair for business purposes to help you stand out, and personally you hate it and get no value out of it, I think that could be an argument, right? It's essentially like a wardrobe costume set change. Yeah.
yeah. I'm gonna try that this year because I dyed my hair twice and it was expensive.
Yeah. Oh, someone asked if you have a small business, no employees, some expenses, is there a benefit to set up an LLC? You can write off expenses for that one. From a legal POV, right? Remember in the beginning, I said from an LLC, there's a bunch of reasons that have nothing to do with taxes. If you want to make sure you can't get sued personally for the work your business does, set up an LLC. If you, well, you don't have employees, so you don't need an LLC from that point. So to answer your question, it's advisable if you want to be protected from a legal POV, but outside of that, like not really. Your framing is actually correct, which people don't realize. You can write off all the expenses that you would write off with or without an LLC, right? People don't know that. It's really only when your LLC's taxed as an S corp you get like extra additional special tax benefits. I would still say though, like from legal POV, LLC, still get a business bank account, business credit card. It's like you still want to report and record your expenses because they're write-offs, and those are the easy ways to do it. Oh, somebody says,
Mhm.
I don't know how to say your name. What if we subscribe to a monthly business account and we receive profit from the business marketing interactions? Do we keep the business subscriptions as a tax write-off? I assume you're just saying, hey, I have a business account with some different types of software like Dropbox. They have like business enterprise level things, and I have to pay monthly. And hey, like I make money, but the money I pay for software subscriptions, can I write that off? And the answer is yes. Just keep track of this.
Mhm. Awesome. There's a bunch of questions that were submitted earlier during the RSVP forms. Feel free to keep dropping your questions in.
Oh
Um,
yeah, let's pull up some of those actually.
yeah.
Yeah, here, Grace, you want to pull it up in screen share?
Yeah, I can select some and there's an interesting one. I know a lot of people have are living in America with the visa. Do you have any advice on how people should pay taxes with a visa? I guess it kind of depends. I'm not an immigration lawyer.
Yeah, so technically, if you do have a visa, you would need to report your worldwide income like a US taxpayer. So that includes, unfortunately, money in the United States, as well as any money you may be making abroad, or money on assets that you may have abroad. So yeah, unfortunately, the cost of doing business and getting a visa in the United States is that you have to report worldwide income and basically give them access to everything.
So they pay
So
double
basically,
taxes technically.
you're paying more taxes.
Yeah, yeah.
Let's see. Yeah. That's why it's so hard for my friends who are like on visa to quit their jobs to start their own company.
Yeah, it's
I
a vibe.
see, I
It's a
see.
vibe.
Yeah. I'm so
So,
curious. Oh, go ahead.
oh, I was just gonna say, there's more questions listed here, but Grace, if you have a question, go for it.
What I guess like this question came from like why don't schools teach us about taxes? Maybe philosophical question, but it's like how do we I guess next step for everyone here is like a higher CPA to learn more about taxes. I guess that's how they can learn more and subscribe to Carrot's channel. Um oh wait, there's questions in the chat.
I'll answer, by
Yeah.
the way, that the question, like why don't schools in the US teach tax
Yeah, why
education, is
not?
because
That's okay.
we actually come very shortly, quickly. We come from a liberal arts education POV, which tends to be focused more on, in the liberal arts tradition, teaching people how to think rather than the pre-professional skills. That's why you often will find courses in some schools on computer science, not on programming, because one is more focused from a liberal arts POV, and here's how to think rather than actually how to do this. And so that's like very tangibly answer your question why there's not as much education on taxes, because it's considered to be a pre-professional skill. All that's beginning to change. But then going back to the actual tactical questions, as I have a little philosophical jaunt, illustration says, how do taxes work if you have clients or contractors outside of the US? I mean, high level, and I assume Kevin, you would agree with this. I mean, if they're contractors that you're paying, these are expenses that you can still write off. If you have clients paying you, this is still income that you're gonna get taxed on.
Correct. Yeah. And you got to think about it from the US standpoint. They're only going to care about the money coming in, right? So if you're paying contractors abroad, there are forms like a W-9, W-9 BEN that are essentially the 1099 for foreign contractors, just so that they can keep track of who you're paying outside of the United States. But as far as foreign income that's coming in, I think one, you have to consider how much it is and do you have any foreign tax obligations abroad? And then in the United States, you would just be reporting it just like any other income.
Yeah, I see how all
Uh,
people hire offshore. Yeah.
Alicia has a good question. If you're a contractor at the contracting agency, can I write off expenses related to being a contractor? Kevin, how do you answer that?
Sorry, let me just ask you your contractor. Oh, yeah. Yeah. If
Yeah.
I understand the question correctly, yes, you can write off all expenses related to being a contractor.
And that is different, by the way, Kevin, correct me if I'm wrong. If you're an employee, you can't.
Oh,
Like
you
Mhm.
can't.
you can't. Like if you're just an employee. So the difference is when you're an employee, you just file a corporate tax return, right? You're just a registered employee. Obviously, you get other benefits to employee, like health insurance and things like retirement plans and things like that. If you're a contractor, it's a little bit of a trade-off, right? You don't have like your retirement plan, your health care from your employer, but you're a contractor, right? This is like you're kind of running your own business. You're just a consultant, you're a contractor, you can totally write off expenses and things. Kevin,
Hmm.
anything I said wrong there?
No, I just think that I misinterpreted so I see the W-2 part now. So you're essentially an employee at a contracting agency. So yeah, you wouldn't be considered a contractor at all. Then you would just be considered an employee, even though you're at a
Yeah.
contracting agency.
Yeah, exactly. If like, yes, to Kevin's point, if you are, if it's a contracting agency, but you are an employee of that contracting agency, you don't get write-offs, right? Even though they're contracting you out. If you are though a contractor with the contracting agency, you are not W-2, right? Like they're
Yes.
paying you and sending you like 1099s, then you are your own person, your own business, and you can do write-offs. That you're right, Kevin. That is actually a confusing, confusing situation.
Hmm. Well,
Cool.
there's some more
Um,
questions. A lot of them are answered through your presentation too. I'm just reading through
yeah.
some.
Any you want to call out?
Oh, okay. One I'm gonna paste into the chat as the banner as well as if you could go back when you first started your first job and you had to file taxes the first year, what would you do differently? Any like mistakes you made, or
Well, I,
I
I
can
will
share a
say
mistake
if
I
if
made.
you're if you're starting your job and you're an employee, a lot of what we talked about with write-offs actually just doesn't apply to you. It's actually, I'd argue, pretty easy if you're just an employee. Basically, because your employer withholds money from your paycheck to pay for taxes, and you just get your form at the end of the year and you put in this is how much I made, and you're pretty much done. I would argue, I mean, Kevin, correct me if I'm wrong, if you're literally just an entry-level employee, you don't even need a CPA. Most of what we're talking about is if you're doing something on your own. And so I'll reinterpret this question to say if you're doing freelance work on your own outside of being an employee, then everything we've said applies. In which case, I
Mhm.
would say the really important things are just keep track of your revenue and expenses, right? Because if you're keeping track of it, which a business card or business bank account can help with, then you can get write-offs and actually save money on taxes. I would say that's one of the most important things.
And another thing I'll add is a mistake I made was I used to work for a big tech company and I got a lot of stock and I sold it all when it peaked. And I should have put it into another stock. Because now I have to pay capital gains. So it's like if you sell stock, put it into another stock. And I'm sad.
Cool.
Yeah.
I'm doing
Yeah.
a quick skim. Someone UX design tech says if you're working 2 full-time remote contracts and making over 200K in combined income, what would be the smartest setup? Guessing S Corp. Yeah, LLC first of all. And if you're making 200K, like yeah, definitely set up an S Corp. And if you're set up an S Corp, honestly, you might as well have a CPA at that point because like it will just be so much work for you to do the paperwork required to be an S Corp and to like set up payroll for yourself. Like over 200K, that's an easy answer. And by the way, congratulations on getting there. That's very impressive.
Yeah, and
Yeah.
one other thing
Slim.
I'll add to that is if you have set up and become an LLC and just didn't know that there were benefits to being an S corp, there are actually late elections that you can apply that will go back retroactively to the date that you began as an LLC or basically started the business. I mean, there's additional filings for those prior years that you didn't file for, but you can save a lot of money by making those retroactive elections if you just didn't know at the time that you could do it.
Mm. Oh, there's another question that is asked. I feel like this happens a lot in like the freelancer world is how do I file my taxes as a freelancer if a client paid me through Zelle and never
Um,
provided my W-2? Can I still file 1099 without having to sign or receive anything from the client? Wait.
that's actually a great question because Kevin, I know a lot of people like they're like, oh, I paid through Zelle. Like I don't Zelle had like a loophole for a while, right? It's like
Yeah.
I don't have to do 1099. So it's actually a great question. Kevin, how would you answer this?
Yeah, so as a CPA, I'm obligated to answer this question and tell you that you should report all of the income that you received through Zelle, even though it wasn't technically reported to you. Because, yeah, if the IRS ever gets hold of all those income payments, I mean, there are other ways of being able to track it, but I would just say be a Boy Scout or a Girl Scout and report all the income that you received through your business.
Yes. So to add additional context for those of you wondering what the heck is going on. So generally, if you're working as a freelancer, right, you're not as an employee, when people pay you, they are also supposed to send you a 1099, which is essentially a document saying, hey, I paid you this much during the year. And they do that so the government knows, oh, as a contractor, this is how much you made. So the government can track it. There are certain payment platforms like Zelle, which I don't remember the exact argument, Kevin, that Zelle makes. I think it's like, oh, we're like a big transfer app. We don't do payments, some nonsense like, or whatever, something like that, where
Mhm.
Zelle argues like they don't have to do 1099s. And so the point Kevin's basically saying is, well, technically it's harder for the government to know, but if you want to do everything totally correct and by the book, you should still report the income you got from it. And you should go back to that client and be like, yo, like how much did you pay me?
Hmm. Good idea. It's like because sometimes people don't ask for a W-9, but just a follow up for that. Every year, I do a lot of freelance work too, like brand deals and stuff. They sent me the 1099s all separately through mail, and it gets sent through like my PO box. And is there a way to find all your 1099s online without having to come through mail? They all arrive at different times.
Kevin, you want to take
No,
that?
so if you log into irs.gov and you actually log into your individual account, you just need to register with ID.me. You can actually go online, look at all of what's called the wages and income report. It's basically a transaction log for each year of all of the income wages that you've received for that year that have been reported to the IRS. So it's a great way to double check before you file your tax return to make sure that you're not leaving anything out, because the first thing they're going to do is match up what they have to what you've reported. And that's an easy way to, red flag it and audit you. So
Oh, I need to do that. I need to see because I have to do so many random brand deals, and I always get the mails at different times. And
Yeah, it's the worst.
yeah, that's why they'll come at different times. So that's why I need to file extensions because they're at my parents' house. Yeah. aside. But yes. Yeah, any more questions from our buddies here? Um, I'm just looking through the questions that are submitted to you. What is the biggest mistake you guys seen people make with taxes in general?
Not paying them.
Yeah.
Like we're not even kidding. Like no, we've worked. Kevin and I both have interacted with creators and creators who did not pay their taxes, and guess what? They figure out eventually, and then they do things like freeze your bank account or start to take slices of whatever you make to cover it, and you get tons of penalties. Uh, yeah, pay your taxes as much sucky as it is. So yeah, some people just don't.
What are the
It
worst
will catch
penalties
up.
you've seen, and what did they do to get that? No, don't need to name any names. Just like worst
No.
case
Yeah. No.
scenario, just to scare people into paying their taxes.
Uh, I saw someone who hadn't paid their taxes for 2 years, and they had about $75,000 in taxes, and probably about 15,000 were penalties and interest.
Yeah, and the interest,
Wow.
the penalties actually accrue, so they get
Yes.
more over time. And
Yeah.
yes, to my previous example, I did have a client who literally like their bank account was like frozen, and they're like, "Is that bad?" And the answer that means like you can't like take money out of it. And the answer is yes, that is bad. Don't do that. So that's why we're doing this. Pay your taxes.
Yes. Yeah, no, that's my college extension because I need to get my ducks in a row.
There's this
But there was a happy ending. There was a happy ending to my client's story, and I went back, filed the returns, reported all the income and expenses. A lot of work, but we ended up getting it down to $5,000. So
yes, if you
Oh,
work with a
okay.
good CPA, there's often like negotiation you can do and like show good
Mm.
faith. Yeah,
Hmm.
everything tends to be negotiation. The one I guess thought I'll say is I've mentioned this before, but there's a YouTuber who made a video. His name's Alex Ramosi, and he was like, "Oh, like here's how you the secret of saving money on taxes." And you go click in, and he basically says, "Don't like waste time trying to finagle your way on taxes. Spend hours and hours in this. Spend those hours and hours just making more money. Like there is an opportunity cost if you trying to do stupid shit." Right? I mean, you'll always find friends who are like, "Oh, I like incorporate in Dubai, so I just don't pay taxes in California." And it's like, sure, like you can do whatever, my friends, but the amount of work it requires you to like try and get away with it, not to mention like the IRS will potentially catch you, and then you're just super fucked. Just like why
Hmm.
bother that hassle? The other thing I'll say is if you do want to look for a CPA, you're probably wondering at what point it makes sense. I would say if you're making at least 80, 100,000, it starts to make sense. CPAs vary in pricing anywhere from 250 a month to like 1,500 a month or more, depending on the complexity of your business. If you're making less than say 80,000 or such, I would say, yeah, just do it yourself, right? TurboTax, whatever. Yeah, just like put in the numbers and record your expenses and so on.
Yeah, I need to follow with my accountant for taxes this year too.
Well,
I
Grace, I
taxes are
mean,
like adult homework. Adult
I
homework.
know it is adult homework. I mean, Grace, I mean, by the way, an easy way to quiz and figure out if your like CPA is like actually more knowledgeable is just
Yes.
I like to use as a litmus test. Just ask them if they know what QBI is and if you qualify.
Oh, wait, I need to do that. Okay, because I need to find a new accountant.
As I said, QBI lets you write off potentially up to
Yeah.
20% of your income. And again, there's certain rules. If you make more than a certain amount, you have to do additional work to qualify. But Kevin, I'm pretty sure like if you're a designer doing freelance work, a lot of that actually would qualify for the write-off, unlike creators doing brand deals.
Hmm.
yeah, it
Oh.
depends. Typically,
Mhm.
when they cut off QBI, it's when the position or role that you're in is tied to your likeness. So with
Oh, yeah,
content
that's true.
creators, unless you can frame it as being a marketing agency. So that's the other thing is a lot of it's just about framing your business in a way
Yeah.
where you would qualify for those sorts of
I think I
things.
think I think as a designer, you could definitely make the argument this is not dependent on my likeness, this is dependent on the work that I do, and thus I'm
Mhm.
eligible for the write-off. So basically, Grace, go back to your CPA and be like, hey, am I getting QBI? And you might not be, and that's fine, but hopefully they at least know what it is. And again, for those of you listening, QBI is literally a 20% write-off of your income, which is like huge and probably more than any of the other write-offs that we've even gone over today.
Hmm.
Mhm.
Right, I'm gonna ask them that question today.
Yeah, and
Oh,
and if
another.
not, if not, come to us. Kevin might be able to help out, or we have a different accounting partners as well. It's a good litmus test.
Hmm. Yeah, let's chat more about that. Cypher asked, despite taxes, what are some other mistakes you recommend newbies avoid in incorporating spending too much money on stuff? I know you mentioned the average price of accountant is like $250 to $1,000 a month. Um, how would you like go about like finding accountants besides like this litmus test, but like pricing models and stuff?
Yeah, Kevin, you want to answer that?
Yeah, well, I think first I would probably just look for a CPA or accountant when you get to that level where it makes sense, that actually specializes in that type of work, right? I mean, I get questions all the time if, I know about auditing or I know about, other types of accounting. If there are people that specialize in specific areas of tax, business compliance, those sorts of things. So just one, make sure you're looking in the right area. Um, and then as far as, newbies making common mistakes, I'd say the most common mistakes that I've seen made are one, just getting everything set up too early, because when you are an S Corp, you file a separate tax return. So you're not only paying for your own individual tax return, but a business tax return. You're paying the business compliance. You have Secretary of State filing fees every year, annual reports. If you miss it, then there's penalties on top of that. So a lot of times people can overcomplicate things, and it can lead to just bigger issues before you've actually hit it, and
Yeah.
in certain situations prevent them, or hinder them from getting to that level, right? So I'd say, not going too fast before you're actually at a point where it makes sense is probably the biggest mistake that I
I
see.
think both of those are really good. I'll also add on, like, yes, if you want to work with an accountant like Kevin or other accountants who are specialized and focused and working with creators, you should follow up with us on what I mentioned, going out in the follow-up email, as well as just DMing us buddies. The second thing I'll add is, yeah, like, just know why you're doing things. Like, sometimes people just do shit because they hear other people should do it. Like, I have lots of friends who are like, I should get an LLC, and then like get one, and there's no EIN, and they've doxed themselves. And it's like, they're like, well, at least I'm saving money on taxes. No, you aren't. You aren't. You're not even saving money on taxes. So that was a waste of time, right? Or they'd be like, well, I'm an S corp. Like, this magic alphabet word will like now make you pay less on taxes. No, if you're an S corp, it's actually a lot of work to set it up properly so you get the benefit of paying less in taxes. I would say if you have an S corp, you almost definitely should have an accountant helping you with it. It's not a good use of your time to figure it out. And so, like, again, so it's like, don't get an S corp unless you're actually aware of how it helps you and like how much work it's going to be. Versus, again, I have friends who are like, I'm an LLC, I'm an S corp, like I'm great now. I'm like, cool. If we're making less than 50K, what do we use for bookkeeping and taxes? I would still say, I'd say two things. From a bookkeeping POV, I do think it's actually helpful to have a business bank account. And Carrot, if you just go to trycarrot.com/banking, we do have a free option that I think is really good that will still help you keep track of things and give you interest on your business checking account. For tax purposes, I mean, Kevin, I'll let you answer that, but there's like a lot of like tax software out there. You don't really need it. Like, you can literally file directly in IRS for free, but the software makes it easier. I think like TurboTax is a popular one. Kevin, I don't know if there's any others you would recommend.
Um, I believe it's called Origin and Monarch are two that are really helpful.
Oh yeah,
Just if you're
Monarch is
using
pretty
it,
good.
yeah, you can just go through and then categorize it directly from your
Yeah.
phone versus going through your bank statements. But yeah.
Cool.
Cool.
Okay.
Alrighty.
There's
Oh,
one
go
more
ahead, Chris.
question.
Yeah.
Alicia asks, for employees with W-2 and 1099, taxes are already deducted from the income. This means the quarterly tax payments are only applicable to income that's not pre-taxed, right?
For W-2, it is already deducted. For 1099, it is not. So if it's 1099, you need to calculate and make the quarterly payments yourself. Kevin Eisen, that's right.
Yes.
Yeah. It's only
Yeah,
W-2. So again, if you're an
yeah.
employee, most of this presentation doesn't apply to you. Like, your taxes are already withheld during the year. You don't get these write-offs. But if you're 1099, you're a contractor, everything we said applies.
Yeah, because an employee, like I remember I used to be just an employee, and I would get like a tax return, and it'll be like plus money because they withheld more, and it depends on your tax
Yes.
bracket and your state and all that
That's
too.
right. So the one thing you can do if you're an employee is you can change the amount that's withheld sometimes,
Mhm.
right? Um, Basically, maybe for whatever reason your employer does not know, you have made stupid amounts of money doing brand deals on the side or whatever, and it's going to push you into another income tax bracket. And so you need to go and change the withholding percentage that your W-2 employer is doing, like things like that. I would say other than that, that's kind of it.
Mhm.
Oh, and then yes, there's
Yeah.
a whole other kettle of fish around, like, if you're a tech employer, if tech employee, you get stock, that's like a whole nother discussion that we will get into another time. Yeah.
Yeah, selling stock. I'm so curious. Just like I feel like a lot of people might have stock or have some investments. There's people like real estate, for example. I know they do. I think what I've heard from people is they keep buying real estate and selling or like renting it out and like buying more as like a way to like avoid income and kind of like
Mhm.
income tax. And then same with stock is like they keep buying but like selling stock and putting it onto another stock. Like how does that whole world work?
Yeah, so what you're referring to about property is a like kind exchange. And essentially, what that is when you're ready to sell a property, you can exchange it essentially for a property of like kind value. And so, any capital gains from that property, but I mean, there's a ton of requirements that go into actually doing this correctly. And I've seen mistakes made on this that have cost people hundreds of thousands of dollars. So you definitely need to get professional help when dealing with like kind exchanges, different types of properties. For stocks, there really is no rollover. There was, I'm blanking on the name right now, but where you could contribute your capital gains into a, what was it, the low income? I'm blanking on it right now, but you could essentially take your capital gains and write them off if you kept them within some type of fund for 10 years, but that was several years ago and does not apply anymore.
Cool. So we're about out of time. So I just want to say to everybody, this has been an absolute joy getting to talk to you about a very fun topic, taxes. I am impressed by all of you for joining today. And again, we'll send up a follow-up email, but just as a reminder, you can DM us buddies and we'll send you info or look for the follow-up email that Grace is going to send very, very shortly. But this was a lot of fun. And remember, as they say, there's only two things you can avoid in life, or you can't avoid in life. That's death and taxes. And at least one of those you can do a lot around to help. So that's probably an
Yeah.
extremely sad note to end on. So let's just end it on, yay, this is so much fun. Thank you, buddies.
Yeah, thank you so much. This is great. And I hope the positive is you now know that you can deduct a lot, like your rent, office space, your clothes. I didn't know that. Your hair dye for business purposes if you use it for your business too. So taxes, it's a way to save money. Well, not a way to save money, but there's ways that you guys learned today that can help save money too.
Yeah, don't be stupid about it. All right, everybody,
So,
bye.
okay. Bye. Thank you so much. And you end the stream.